This is your technical update from the LMAX Exchange Research and Analytics Desk for Friday, November 13th, 2015. Euro dollar. So despite some recent corrective gains in the euro, the overall pressure remains on the downside following that significant break below the July base at 108.09. At this point, deeper setbacks are now favored back towards a retest of the recent multi-year lows this year back in March at 104.62. Any rallies from here should be very well capped into the 110 area, while ultimately only back above 113 would take the immediate pressure off the downside. Sterling dollar. So cable has seen a bit of a correction in recent sessions, though this correction should stall out in favor of yet another lower top as the market continues to show signs of topping off that 2015 peak at 159.30. At this point, deeper setbacks are eventually favored back below recent lows and down towards the 2015 base at 145.66. Dollar yen. So dollar yen has shown signs of stalling out following the impressive rally above the August peak at 121.74, with the market stalling into the 123.50 area. At this point, the 78.6 Fib retracements off of the 2015 high to August low is the key level to watch. A break in establishment above this level would open the door for a full retracement back towards 125.85 and beyond, while inability to establish above will suggest that a lower top is in place here in favor of the next major downside extension, potentially all the way back down towards that August low at 116.12. Euro Swiss. So Euro Swiss continues to consolidate above 107, with the market holding in a good support in the 107.14 area. At this point, while the market does hold above 107.14, setbacks are expected to be well supported in favor of a resumption of the recovery off the yearly lows and record lows back above 110.50 and towards a measured move at 112 further up. Only below 107.14 would compromise the immediate recovery outlook for Euro Swiss. Aussie dollar. So despite gains in recent sessions, the market remains confined to a broader downtrend, and rallies are expected to continue to be very well offered ahead of the 73.82 recent lower top, and in favor of the next downside extension back towards and eventually below recent multi-year lows at 69.08. Dollar CAD. So dollar CAD looks poised for an eventual break of the recent 11-year high from September at 134.57, with the market being very well supported above some previous resistance now turned support in the form of the 128 area. At this point, any setback should be very well supported into the 130 area, while ultimately only below 128 would compromise the highly constructive outlook for dollar CAD. Kiwi dollar. So Kiwi looks to have finally been carving out a medium-term lower top now after the market stalled out ahead of 70, and the market looks to be poised for a retest of those recent multi-year lows from August in the 62 area. At this point, look for any rallies to continue to be very well capped ahead of the 67 area. Ultimately, again, only back above 70 would compromise the immediate bearish outlook. SPX 500. So the S&P 500 is showing more signs of stalling out after the market had traded within a stone's throw of the 2137 record high from May. At this point, next key support comes in by the low going back to the 21st of October at 2015, with a break below to further accelerate declines and solidify the prospects for the possibility for a lower top below that record high at 2137 and more significant bearish resumption. At this point, only back above 2117 would compromise this newly adopted bearish outlook for equities. Gold. So gold has pulled back to break to fresh multi-year lows below that previous multi-year low at 1077, with the market now potentially exposing itself to an acceleration towards the 1000 area further down. But at this point, daily studies are oversold, so there is risk for a short-term bounce over the coming sessions. The market will need to trade back above 1100 to take the immediate pressure off the downside.